are experiencing technical difficulties. Please stand by.
The market is always having technical difficulties, but Money Life can help. Every Friday, we're talking technical analysis.
We've come for help and we're not leaving without it.
Are you confused by the technical jargon and terms?
This is what makes you confused! Don't you get it? This is confusing you right now, isn't it?
Our guests will talk about the techniques they use each day to analyze the market and tell you what they see now in some of the market's numbers and charts.
Please stand by. Technical difficulties are temporary.
They'll tell you about the trends they see and how you might react to them to plow through the market's technical difficulties.
Yeah, I'm pretty confused, all right.
So stay tuned and get ready to cut through the confusion with Chuck Jaffe talking technical analysis on Money Life.
I'll take it a step further. I'm not just talking technical analysis. I'm talking technical analysis with somebody who I really enjoy having these discussions with. Her name is Toni Turner, and she is the president of the Trend Star Group. She is the author of a book called Invest to Win. We actually had her on the show talking about the book when it came out a few months back. And if you want more information on the book or on what she's doing, well, go to her website, which is ToniTurner.com. That simple. Toni Turner, welcome back to Money Life.
Thank you, Chuck.
You know, we are living in the proverbial interesting times, and for market technicians, they tend to look at things and go, I'll ignore the headlines, and I will simply look at where the charts and the patterns are leading me. But when you look at it, can you ignore everything we have been through in the last couple of weeks with the shutdown and the possible debt ceiling? I mean, even though it's just kind of been pushed back now, can we ignore what that's done to the charts, or has it affected the charts? And, oh, by the way, we'll see it play out now for the next couple of weeks or months.
Well, you know, I love that question because it's an ongoing debate between myself and my students and my colleagues. What if we turned off the TV? What if we lived under a rock and only traded the charts? I am still convinced, although I don't do it because I just feel like I have to know what's going on. But you could just trade technically, like this past week, or when the folks in Washington took the debt limit right up to the very last second. I think we need to know that as traders. However, it did work out all right, and the charts, most of them look totally unconcerned. Most sectors are headed higher. The S&P is noodling around near its all-time highs. And truly, you wouldn't know the patient was sick, Chuck.
Well, I mean, it's interesting because the rapid traders, the guys who are trying to flip ETFs to get, oh, what's this trend? Oh, this was just said. Let me try to. They couldn't care less other than what moves the chart for a couple of seconds and can they capture. For anybody else, it's so hard to ignore the news. So when you look at it and you go, okay, we've just been through this, and the charts basically look unconcerned, does that mean that investors should stay the course, or does that mean that, well, where we were before these problems became front page news, that's where we're still headed, and oh, by the way, where do you see that being right now? I mean, markets had a good run, and we're normally getting into what is the best time of the year for investors.
Well, we really are. November, December, January are traditionally the best months of the year. Of course, November to April is traditionally the best season of the year for making the most profits. And you have to say, I mean, the patient, again, it doesn't look sick. The truth is, I took some positions off before all this debt debate, debt talk came to a head. I lost money on that trade because the market simply laughed and went higher. Now we see again the S&P at all-time highs here. The NASDAQ is laughing and running higher like no tomorrow. Do I think that's going to continue? Maybe it's got to slow down here because internet stocks are starting to look weak. They've been leading. The QQQ is trading 10% again over its rising 200-day moving average. Usually when it gets up that high, it needs to pull back a little bit. I'm worried about some expanding triangles I see on charts like the Qs. So I believe that this particular rally is going to have some profit taking in it pretty soon.
What does that mean? What are the areas where you say, here's where there's some hay to be made, and what are the areas where you say, thanks, but I'm not here?
Okay, internets. Look at the FDN, which is the one of the internet ETFs, that's starting to look a little puny. And if you look at the 14-day RSI, that for me is at least telling the tale. I like utilities here. And of course the interest sensitive stocks are the ones now that are saying, hey, interest rates are going to remain lower for a while. We're starting to look real pretty again. So I like, in the short term, I think, I like housing stocks here like the ITB ETF. I like utilities a lot. That's the XLU. I'm staying away from internets and some of the tech stocks because I think with the exception of IBM, they've moved pretty hard, pretty fast.
And are we at a spot where the market, while it may have to take a couple of sideways steps or what have you, having gotten through the political strife and what have you, that we don't have to have the massive correction that some people were calling for?
I want to say yes to that because bull markets are so much more fun than bear markets. I do see, if you look at a weekly chart of the S&P 500, it's in very obvious evidence there. There's a long-term rising wedge. Rising wedges typically don't end well. So we want to watch a pivot point of 1646 on the S&P 500. Should it fall below that point, that rising wedge, that bottom trend line will be broken on the weekly chart, and then we could see some more downside. But hey, that could be a month out, several weeks out, could be tomorrow morning early. I can't predict that. I just don't know which way, but it does look like, upcoming we need to be wise and maybe get a little more defensive.
Well, it is really interesting stuff. And Toni, we're going to have you back as we watch how this plays out to see just how big that threat is and whether it comes to roost. So I hope you'll come back to talk to us again soon.
Thanks for having me, Chuck.
Toni Turner is the president of TrendStar Group, the author of Invest to Win. And if you want to learn more about all the things she does, check her out at ToniTurner.com. There is much more to go on the October the 18th edition of Money Life. Up next, our big interview, we're going to be talking about what the North American Securities Administrators believe are the biggest persistent threats to investors. That's next when Money Life continues.